Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets. Today was a very hectic day all around. Bitcoin and the cryptocurrency space are dumping. The marijuana sector dumped. The market had a ton of volatility back and forth. Started with weak consumer confidence, progress in impeachment for Trump. Trump put out a tweet saying, I'll release information about the call. That led to a quick short squeeze that got no follow through. The most important factor for me in the S&P 500 today is we never changed the 5-minute trend once. Every single move is a lower high, lower low. Even the double bottom, perfectly timed double bottom, Trump puts out his tweet, 10-minute short squeeze, zero follow through, no 5-minute higher low and higher high. So where we stand right now, top fishing bears are getting some nice profit and getting follow through. We have lost the daily uptrend. The low of the FOMC reaction has broken. What that means is now, zoom out to the weekly time frame, we have our all-time high, low of the August dump, lower high, and we're scouting for a higher low compared to the low of the August dump unless we see significant bear volume on SPY. We have to see significant bear volume in order for us to believe that we can just drop straight to a weekly lower low. So I need to see more than above average volume, which we had today. But look at the last time. Look at the August dump. 4 days in a row of huge bear volume. So if bear volume keeps up, if tomorrow we see volume in line with today, 90 to 100 million shares traded, and another red day, then absolutely the possibility will start to increase that we can break. Again, we're always just looking probabilities. What is the most likely scenario? In my opinion, it's more likely we set a weekly higher low and have a tightening weekly range and maybe even get a dull market through October and to start into November. If we get high bear volume, then the probability needle will start to shift towards, well, we are getting more likely now to break that August low. So right now there's a gap on SPY at 294.06 that we'll be keeping an eye on. But honestly, big picture for me, it is all about the weekly time frame because we have not entered a weekly downtrend since the December dump, and we are still in a weekly uptrend at this point as long as those August lows hold. So again, plenty of reason for bears. I think a recent video I said there's plenty of reason for bulls to be in trades and for bears to be in trades. At this point, bulls would have gotten stopped out if their time frame is anything shorter than the weekly time frame, and the bears are now seeing some nice profit. On the hourly time frame, the bounce at the end of the day today is a new resistance level. For SPY, that's 296.93. Anything under that level is an hourly lower high, keeping the bears in full control. RSI on the hourly cooled off into the end of the day. And the question is, how long are we going to stay in an hourly downtrend? When we bounce, we have a daily resistance now. The high of today, 299.84, is our daily lower high. So plenty to be watching. Short-term momentum now in favor of the bears. Longer-term momentum still in favor of the bulls. Volume. Cannot stress that enough. Volume is the key. IWM dropping down. It has not found its higher low, but we have a lot of space before 146. I'm going to be looking for a higher low compared to 146 and then a bounce for a daily lower high. Looking at it on the weekly perspective, same thing. High, low, lower high, unable to break resistance, scouting a higher low compared to the August low unless we see big time bear volume. And not just one day. We need consistent multiple days. Doesn't have to be multiple days in a row, but multiple days with big red days and big bear volume. QQQ already had broken because of the dividend distribution, but the NQ futures were still in their tightening range. That broke today. Same setup. Weekly time frame, high, low, lower high, scouting a higher low compared to 179.20 unless the bear volume tells us otherwise. XLF is still pulling back. We have no clear support level established because we ran so hard leading into the FOMC. Looking at it from a weekly perspective, the same setup. High, low, lower high, and pulling back and looking for that higher low. Tons of double tops everywhere, which is why bears had every right to be entering positions as long as they had stops above those resistance levels. XLV Clear bear break on the daily now with a double top and a lower low. So we zoom out to the weekly chart. 88.19 is the most important weekly support. High, low, lower high, watching 88.19. XBI had the bear break yesterday, but it happened right at the end of the day, and we didn't have any follow through. How's that for follow through? That's the kind of volume that bears want to see. Dumping through and heading back down to 77.87 support, weekly lower high, and we're heading back down towards that low of 77.87. And if that breaks, we're looking down at the December dump low. XBI has been the weakest sector for a while now, and that's continuing to remain the case. The VIX with a big bull move. So we've gotten over our range the last few days. 2140, actually 2120 and 2160 are the next short-term levels to be watching. And again, another falling wedge. Remember the last time heading into the FOMC? We had our falling wedge pattern that we were watching, and it ended up breaking bullish. There's your bull break. FOMC was right around here before that break, and we have the exact same thing happening. Not as picture perfect of a falling wedge. Have to trim off one candlestick for it to be perfect. And this little candlestick, this gap up open, is floating. Generally, I don't leave candlesticks left behind, but in this instance, another falling wedge into the FOMC. Here's our break after the FOMC. Very similar falling wedge patterns, and we'll see how far the VIX bulls can take it. Gold bulls loving the weakness in the market. Follow through ever since our 10-hour equilibrium broke bull. We've got 1557, our recent high, weekly higher low clearly established, and bulls will be looking for continuation if market weakness continues. The utilities sector is also at all-time highs, which is generally a safe haven in market weakness. Silver is not nearly as strong as gold. You look at the move on silver's 4-hour time frame today, we pulled back, couldn't break the high. You look at the same move on gold, we pulled back and blew through the high. So gold gaining a leg on silver today, but same setup as far as the weekly chart is concerned. Higher low established, and we're looking up to recent resistance. The longer the market stays weak, the better that is for precious metals and in return those bull miners. Bull miners getting significant follow through. Their bull break was at 33.49. It's been nothing but follow through. But as I pointed out in a recent video, let's keep an eye on dust, and let's see if dust has a bottom fishing play off of 567 approaching. If we see a red day in dust tomorrow, I'll start to get interested in a play off of that support, just anticipating that the bull miners, unless the market gets real ugly and fuels gold higher, I would expect that NUGT is going to initially reject from 45.10 and have to pull back and form a daily higher low. Oil never changed the 4-hour trend bullish. Every bounce is a 4-hour lower high, and we drop down to a lower low now, and there's no support nearby. So on the daily time frame, we've got our low, high of the Iran-Saudi spike, and we're looking for a higher low compared to 53.99. Bears have complete control as long as that 4-hour chart is in a downtrend. And last, natural gas, head and shoulders pattern. Not my ideal head and shoulders pattern because we already broke support, but if we drop down and break 494, there's no support nearby. Weekly consolidation is already underway, and now the question remains, is this going to be healthy weekly consolidation that favors continuation, which right now it still does? If we can hold that exponential support, it will. Or are we going to see weekly consolidation that favors a tightening range? And if we lose the exponential support, that's the kind of consolidation that we'll look towards. So overall, market weakness, short term, weekly time frame, equilibrium setting up everywhere, have to see big bear volume through the end of September into early October. Otherwise, we will anticipate weekly equilibriums. And what weekly equilibriums mean to me is slow down my trading. And not yet, because the range isn't tight enough yet. But if we look at SPX, there will be a play, unless big bear volume. If there's not big bear volume, I will be looking for a weekly higher low with a play off of August support. And then after that happens, if it does happen, it gets to a point where the range gets tight. And the tighter that range gets, the more choppy the hourly and the daily time frame are going to get, which tells me slow down your trading and get conservative in tightening ranges. Play aggressively on the breaks of tightening ranges. Bitcoin just had a 3-month weekly equilibrium break bearish, and we saw 10% follow through on that bear break. Gold, 2-year tightening range on the monthly equilibrium. It got a break with tons of follow through. So it'll be great. I would love to see a weekly equilibrium into the end of the year because we know that when that break does occur, we should get some notable follow through. But until that happens, every single day, what I'm going to be looking at first thing is, what's the bear volume? Are the bears proving to us that they can break the August low? Because on this weekly time frame, the burden of proof is on the bears, and if they do not show up with the volume, a weekly higher low is very likely to form. Thanks again. Have a great night. We'll see you soon. I'm not going to be doing regular videos for the next couple of days. I'll do my best to update when I can, but I'm going to be bouncing around a bit and not at my home base. So I'll see you when I see you.
It's a duck triangle.